Usually when we talk about a medical diagnosis, there's this expectation of absolute precision. You break your arm, you go to the hospital, and the X-ray shows that jagged white line.
Right. It's right there in front of you.
Exactly. The doctor just points to the screen and says, well, there it is. That's the problem. And it's incredibly comforting because you can actually see the issue with your own eyes.
Yeah, it's a highly tangible process. I mean, human beings are wired to trust what we can visibly confirm. We like to hold the evidence, categorize it, put a cast on it.
But then you step into the world of advanced semiconductor manufacturing, and we are talking about the literal physical brains powering the entire global artificial intelligence revolution.
Which is a whole different ballgame.
Completely. In that world, the standard X-ray machine is completely useless. You're suddenly looking at a diagnostic landscape that is, well, it's entirely invisible to the human eye. It operates strictly at the atomic scale.
You are working completely in the dark. And that is, that's the definition of diagnostic muddy waters, unless you happen to manufacture the most precise, complex, and ridiculously expensive flashlights ever conceived by human engineering.
And today we are grabbing one of those flashlights. We've got a really fascinating stack of sources in front of us, specifically focusing on KLA Corporation's fiscal 2026 third quarter results.
Right, their latest financials.
Yep. We are pulling directly from their official earnings press release, their Q3 FY 2026 earnings slide presentation, and their SEC Form 10-Q, all of which dropped recently between April 29th and April 30th, 2026.
And, at first glance, a stack of SEC filings and earnings slides might seem like the driest reading material on the planet. I mean, it's a mountain of GAAP versus non-GAAP reconciliations, compliance statements, dense financial tables.
Oh, for sure.
It looks intimidating.
But if you know how to read them, these documents are actually a treasure map. They reveal the hidden engine driving the global tech boom. If you've ever wondered how the tech world actually functions behind the scenes, miles away from those flashy consumer product keynotes, this deep dive into these papers holds the answers.
It really does. It's the foundation of everything we're using right now.
Okay, let's unpack this. Because the initial data drop KLA reported for their fiscal third quarter is just, it's staggering. They posted revenues of $3.415 billion, which actually beat the midpoint of their own guidance.
Wow.
And they delivered a non-GAAP diluted earnings per share of $9.40.
Yeah, pulling in over $3.4 billion in a single 90-day window is a massive achievement for any hardware company. But beating the midpoint of your own guidance at that scale, that suggests that the demand for your specific product is actually accelerating faster than your own internal forecasting models predicted.
Which is wild. Because hitting those numbers doesn't happen just because you have a really persuasive sales team or a clever marketing campaign. You don't accidentally stumble into billions of dollars.
Definitely not.
It requires a structural macroeconomic tailwind pushing your entire industry forward.
If we connect this to the bigger picture, KLA is executing what is arguably the most successful pick-and-shovel strategy in modern technology.
Oh, I love that analogy.
Yeah, we always hear that old adage about the 1849 gold rush, right? The people who actually secured guaranteed fortunes weren't the ones standing in the freezing rivers panning for gold.
Right, they were the merchants selling the picks, the shovels, the denim jeans, the tents to the miners who were taking all the actual risks.
Exactly. And KLA's CEO, Rick Wallace, essentially framed their entire corporate strategy exactly that way in the earnings release. He explicitly cited KLA's role as a vital enabler of the global AI infrastructure build-out.
Because they don't make the chips themselves.
Right. KLA does not design the actual AI chips. They aren't writing the software architectures or training the massive large language models. They provide the advanced process control and process-enabling solutions required to actually manufacture the wafers. They make the tools that make the chips.
I've been visualizing it like this. If companies like NVIDIA and AMD are out there designing the high-speed, million-dollar race cars of the AI world, the flashy engines everyone is constantly talking about, KLA is the company building the microscopic wind tunnels and the ultra-precise diagnostic computers.
That's a great way to look at it.
Because you physically cannot build that race car without KLA's diagnostic tools ensuring the engine doesn't literally explode the second it hits the track.
That analogy holds up perfectly when you look at the revenue breakdown in their slide presentation. Out of that $3.415 billion total, a massive $3.084 billion came directly from their semiconductor process control segment.
So that is the absolute core engine of their business.
It is. And when you look at the customer base buying that equipment, Roughly 82% is driven by foundry and logic customers, with the remaining 18% coming from memory.
Okay, let's quickly define that for a second for everyone. When we say foundry and logic, we're talking about the companies actually fabricating the complex processing brains of the computer. The CPUs and the GPUs doing the actual math.
Exactly, the heavy lifters.
Right. And the memory customers, that 18%, that's mostly DRAM, which is the short-term workspace the computer uses to hold data while it's thinking.
That is the exact division of labor. The foundries rely on KLA to ensure the intricate logic gates are formed correctly, while memory manufacturers need them to ensure billions of memory cells are flawlessly stacked.
Think about your own daily routine for a moment. Every single time you ask a chatbot on your phone to summarize a long PDF, or you generate an image from a text prompt, you are relying on an immensely complex sequence of logic and memory chips.
Yep, every single time.
And those chips physically could not be manufactured at a commercial scale without KLA's quality control technology.
Because without advanced process control, the yields, which is the percentage of chips on a raw silicon wafer that actually function properly, would be dismally low. If only 10% of your chips work, I mean, the economics of manufacturing completely collapse.
Yeah.
You need KLA to push those yields up to a profitable margin.
But being a pick and shovel provider, while fundamentally a great strategy, doesn't automatically mean you get to dictate terms to the entire industry. I was looking at the market share slide from their presentation, and this is where I start to have questions.
What caught your eye?
They currently hold a 58% market share in process control. 58%. And that is up 360 basis points just since 2021.
It is absolute market dominance.
Right, but doesn't that massive footprint make them a giant target? In the software world, if you own 58% of a market, you're usually just waiting for some hungry startup to come out of a garage with a sleeker app or a cheaper subscription model and steal your lunch overnight.
That's usually how it goes, yeah.
So is that 58% share actually a vulnerability?
Well, in consumer tech, a 58% market share can absolutely vanish in 2 years. But hardware, specifically atomic-level hardware metrology, operates under a completely different paradigm.
How so?
That 58% isn't a vulnerability, it's a nearly impenetrable fortress. To understand why, we have to look closely at the specific systems mentioned in the sources that create this moat. They achieve the #1 share position in advanced wafer-level packaging process control, alongside massive market share gains in optical inspection and e-beam technology.
Yeah, I mean, you can't code e-beam technology in a dorm room.
You certainly cannot. It requires decades of applied physics. The slides highlight 2 specific systems that illustrate this perfectly. Let's look at the Teron SL670EXP.
Okay.
This is a high-performance reticle inspection system. It's deployed during manufacturing to identify yield-critical defects on EUV, which stands for extreme ultraviolet reticles, specifically for advanced 5nm and 3nm chip production.
Okay, pause right there. Let's decode that because EUV reticle sounds super intimidating. A reticle is essentially just a highly complex stencil, right?
Basically, yes.
In chip manufacturing, they shine light through this stencil to print the microscopic circuit patterns onto the silicon wafer. So an EUV reticle is a stencil designed specifically for extreme ultraviolet light, which has an incredibly short wavelength, allowing them to draw impossibly tiny lines.
That is a perfect translation. And the scale of those lines is the key here. They are inspecting at the 3nm scale.
Just to put 3 nanometers in perspective for you all, a single strand of human hair is roughly 80,000 to 100,000 nanometers wide.
Right.
A single strand of human DNA is about 2.5 nanometers across. So KLA's Teron system is inspecting a manufacturing stencil for flaws that are literally the size of a strand of DNA.
And if that stencil has a defect the size of a few atoms, every single chip printed using that stencil will be defective.
Wow.
Now pair that inspection capability with another system they feature, the Alaris 8510. This machine utilizes 150nm broadband spectroscopic ellipsometry to measure film thickness on the chip at the atomic level. It monitors the layers from the gate through the poly.
Okay, gate through the poly. For anyone not currently wearing a white hazmat suit in a clean room, you're talking about the fundamental architectural layers of a single transistor. The gate is the doorway that controls the flow of electricity, and the polysilicon is the material often used to build parts of that structure.
Exactly. And the measurement tool they use, spectroscopic ellipsometry, is fascinating.
It sounds like pure science fiction, but if I understand the mechanics correctly, they are basically firing specialized polarized light at the surface of the chip, right?
Yes.
And by measuring exactly how the polarization of that light changes when it reflects off the different microscopic layers, they can calculate the thickness of those layers. It's almost like throwing a tennis ball at a wall in the pitch dark and knowing exactly what the wall is made of and how thick the paint is, just by feeling how the ball bounces back into your hand.
What's fascinating here is when you combine all of these complex mechanisms, the bouncing light, the extreme ultraviolet stencils, you realize KLA isn't just selling hardware. They aren't just boxing up very fancy microscopes and putting them on cargo planes. They are selling absolute certainty at the atomic level.
Because the cost of not having that certainty is catastrophic.
Right.
A microscopic imperfection, a single stray atom in the wrong place on that 3-nanometer stencil, doesn't just make the resulting chip run a little hot or drop a few frames in a video game.
No, it ruins the entire silicon wafer.
Exactly. It turns a multi-million-dollar, months-long manufacturing cycle into incredibly expensive trash. So chip manufacturers gladly pay KLA billions because KLA provides the insurance policy against total failure.
Providing that level of atomic certainty is a monumental task. And when you were the undisputed leader in providing it, you generate a staggering amount of cash.
Here's where it gets really interesting, because when we transition from the physics of the clean room to the cash flow statements in these SEC filings, we see exactly what a 58% market share looks like in pure dollars. For the March quarter alone, KLA generated $622.3 million in free cash flow.
That is huge.
That represents an 18% free cash flow margin.
Not only that, but they reported a 50% free cash flow conversion rate relative to their non-GAAP net income.
Meaning they are incredibly efficient at turning their paper profits into actual liquid cash in the bank. But it's what they're doing with that cash that really caught my attention.
Their capital return strategy.
Yes, how they dish that money back out to the people who own the stock is incredibly aggressive. In this past quarter alone, they handed $874.8 million back to shareholders.
The majority of that, $626 million, was executed through share buybacks. They're using their cash to buy their own stock off the open market and retire it, which, automatically increases the value and earnings power of every remaining share.
Plus the $249 million they paid out in direct cash dividends.
Right.
So they handed back almost $1 billion in just 90 days. But that's just the baseline. Alongside these Q3 earnings, KLA's board of directors announced a brand new $7 billion stock repurchase authorization. Plus, they announced their 17th consecutive annual dividend increase, bumping it up 21% to $2.3 per share.
It's a massive payout.
Now, I have to push back on this strategy for a minute. Let's play devil's advocate.
Sure.
If I'm running a highly specialized technology company, and my entire business model relies on outrunning the fundamental laws of physics to inspect structures the size of DNA, shouldn't I be hoarding every single penny?
You'd think so?
Right. Handing $7 billion back to shareholders feels like something a mature, slow-growth legacy company does when they've run out of ideas. Shouldn't they be pouring all of that $7 billion into research and development? Are they just coasting on their 58% market share and cashing out the golden goose?
This raises an important question. And it's perhaps the most critical tension in modern corporate finance. The balance between funding the future through innovation and rewarding the shareholders in the present.
Exactly.
But when you examine KLA's management by metrics philosophy, which is detailed in the 10Q, you see that they aren't starving R&D to fund these buybacks.
Okay, I like to think about it like a homeowner. If someone is throwing massive, lavish block parties every single weekend, which is basically what a massive stock buyback is, you might think they're being financially irresponsible.
Right, like they're burning through their savings.
Yeah, unless, of course, you look at their bank account and realize they've already paid off their mortgage, fully funded their kids' college accounts, and have zero credit card debt. At that point, the block party is just them enjoying the surplus.
That's a highly accurate way to frame KLA's financial discipline. Their target model explicitly aims to return greater than 90% of their free cash flow to shareholders. But they can comfortably do that because their fundamental business engine is just so ridiculously profitable.
How profitable?
They boast a 62.2% non-GAAP gross margin.
Wow. So they keep over 62 cents of gross profit for every single dollar of equipment they sell.
Furthermore, their balance sheet is a fortress. They have A- investment-grade credit ratings from both S&P and Fitch. They're sitting on a liquidity cushion of $4.95 billion in total cash and marketable securities.
Which is a massive safety net.
And regarding your point about R&D, they aren't neglecting it. They spent nearly $389 million on research and development just in this single quarter. They have the financial luxury to do both simultaneously. They can fund the insanely expensive atomic physics labs of tomorrow while systematically rewarding the investors of today.
Which honestly makes perfect sense when you look at it that way. A board of directors does not authorize a $7 billion stock buyback program if they are worried about a competitor wiping them out next year.
No, absolutely not.
You only place a $7 billion bet on your own stock if your executive team is supremely confident in your long-term dominance. And that leads us to the final piece of the puzzle in these documents. What exactly does KLA's crystal ball look like for the next few years?
Well, the short-term guidance is solid. For Q4 of fiscal 2026, ending in June, they are guiding for $3.575 billion in revenue and a GAAP-diluted EPS of $9.66. But the truly compelling narrative, the thing that explains the massive buyback, is what they call their 2030 target model.
Predicting the technology landscape 5 years out feels like trying to predict the weather on Mars. But what is their actual target?
By 2030, KLA is targeting $26 billion in annual revenue.
$26 billion.
Yes. And to accompany that top-line explosion, they project a massive operating margin of 45 to 47% and an absolutely staggering $84 in diluted earnings per share.
An $84 EPS is massive, and that actually ties right back into the buybacks we were just debating. If they are constantly buying back and retiring their own shares over the next 5 years, they are drastically reducing the total number of slices in the pie.
Exactly.
So when that $26 billion revenue target hits, the profit is divided among far fewer shares, which is how you artificially rocket the earnings per share up to $84.
The financial engineering works perfectly in tandem with the business growth. But to get to that $26 billion revenue mark, they are relying on a massive macro assumption about the global economy. KLA's model assumes the entire semiconductor ecosystem will experience an 11% compound annual growth rate, a CAGR of 11% between calendar years 2025 and 2030.
That is an incredibly steep growth curve for an industry that is already massive.
It is. Within that projection, they expect the wafer fabrication equipment market, the WFE, to grow to $215 billion.
Let's pause and visualize what a $215 billion market for wafer fabrication equipment actually means. That represents a global reallocation of capital. That is, governments and mega corporations building entirely new manufacturing ecosystems across the planet.
It's a complete shift.
If KLA hits their $26 billion target by simply maintaining their 58% stranglehold on process control within that exploding market, they elevate far beyond being just a successful tech company riding a temporary AI wave.
They transition from being a successful vendor to becoming a critical piece of global infrastructure.
Exactly. They become structurally foundational to the advancement of human technology. If KLA misses a step, or if their diagnostic flashlights suddenly stop working, the global scale-up of computing power literally grinds to a halt. They own the toll booth on the highway to the future.
They really do.
So, what does this all mean? When we zoom out and look at the whole picture, KLA is essentially the invisible shield protecting the artificial intelligence revolution. Whether you are actively managing a portfolio, working in the software sector, or simply relying on AI tools every single day to make your life easier, KLA's financial reports offer an incredible masterclass in business strategy.
I couldn't agree more.
They prove that in the middle of a frantic gold rush, the most durable, reliable money is very often made by the companies checking the tools, ensuring the quality, and providing the infrastructure. The headline-grabbing companies building the shiny end products are taking the risks, but the infrastructure providers are quietly cashing the checks.
It's an incredibly powerful position to occupy. But as we look toward those massive 2030 targets KLA has laid out, there is one final, almost philosophical question that this data brings to mind.
Oh, what's that?
We have to wonder about the absolute hard limits of physics. As we discussed, they are currently using bouncing light and ellipsometry to measure atomic films at the 3-nanometer scale. But the demand for AI computation is insatiable.
It never stops.
Right. It is pushing chip makers toward the 1-nanometer scale, and eventually beyond that into what they call the angstrom era, where we are measuring fractions of an atom. At that scale, the physical laws of the universe become incredibly unforgiving. Will there come a point in the near future where our physical ability to simply Inspect a chip to verify that the atoms are in the right place becomes the ultimate bottleneck for all human technological progress.
Wow. That is a brilliant and slightly terrifying thought. If we can theoretically engineer a chip, but our tools physically cannot see it to verify that it works, can we actually manufacture it at scale?
The flashlight might eventually hit a wall that physics simply won't allow it to illuminate.
We started this deep dive talking about the comforting certainty of a medical x-ray looking for a jagged white line on a broken bone. But, as we've seen in the invisible world of KLA, that x-ray is replaced by a desperate, highly lucrative search for a single microscopic atom out of place on a silicon wafer. It is an invisible battlefield, but the billions of dollars flowing through these earnings reports prove the stakes couldn't be more real. Thank you for joining us on this deep dive into the sources, and we'll catch you next time. Keep exploring.